When it comes to investing, you often hear the term diversification, not putting all of your eggs in one basket. Not only does diversification lower your risk of losing money, but it also lowers volatility within your portfolio. If you have watched any of my videos in the past, then you already know that I love dividend growth. It takes the power of compounding and puts it into overdrive. With dividend growth, I'm less concerned about the yield and more concerned about the dividend growth year in and year out. And in today's video, we are going to take a look at 4 of the top dividend growth ETFs for you to consider for your portfolio. And as we go on throughout the video, we will start with the slowest dividend growth rate, the 5-year dividend growth rate, and as we move on, we will end with the fastest growing dividend growth ETF. So if you're ready to get started, do me a huge favor, click that like button down below, subscribe to the channel so you are notified anytime we put out new content or we are conducting a live stream. We have started doing live streams, the Dividend Power Hour, every Thursday at 7 p.m. Eastern Time, so jump in and you can ask questions to me live while we're on that hour focus. So with that being said, let's jump into the video. Hey everyone, Mark Rusin here, back for another video. As always, I'm a CPA and not a financial advisor, so please perform your own due diligence and do not take this as financial advice. And a quick word from today's sponsor. Today's video is sponsored by The Motley Fool. The Motley Fool has a ton of great resources and products for investors of all levels. And right now, if you go to fool.com/Mark, you could sign up completely free to receive their 10 best stocks to buy right now. So now back to the video where I mentioned we'll be going through 4 of the best dividend growth ETFs for you to consider for your portfolio. We'll be looking at that dividend growth. We'll be looking at their performance and the makeup of the ETF, including sectors and top holdings and much more. And at the conclusion of the video, I want you to comment down in the comment section below and let me know which of these 4 is your favorite dividend growth focused ETF. With that being said, let's begin with the first dividend growth ETF, which is the Vanguard Dividend Appreciation ETF, stock ticker VIG. VIG happens to be an ETF that not only has the slowest among, it's still fast, but the slowest among the 4 dividend ETFs we're looking at today in terms of growth rate, but it also has the lowest yield, and much of that has to do with their exposure to the technology sector. VIG is an ETF that was launched in 2006 and it is currently managed by the Vanguard Group. It also has a low expense ratio of 0.06%, making it a very low cost option. Currently, they have assets under management of $66 billion. Let's begin with performance. Looking here, you can see that over the past 5 years, shares of VIG have gone toe-to-toe with the S&P 500, returning 65% compared to the S&P 500 returning 68%, with much of that difference happening in the past 3 months. The ETF is well diversified across many different industries. The top 5 industries include technology, which I mentioned, financials, healthcare, industrials, and consumer defensive. Those top 5 industries account for 80% of the ETF. Now let's take a look at top holdings, which include Microsoft, Apple, ExxonMobil, United Health Group, Johnson & Johnson, JP Morgan Chase, Procter & Gamble, Visa, MasterCard, and the Home Depot. These top 10 holdings account for 31% of VIG, and in totality, the ETF has a total of 317 holdings. Now for the dividend. VIG has paid out a dividend of $3.03 over the past 12 months and currently yields a dividend of nearly 2%. Over the past 5 years, the ETF has seen the dividend increase by an average annual rate of nearly 10%, and the dividend has increased for 9 consecutive years and counting. The second dividend growth ETF on our list is the iShares Core Dividend Growth ETF, stock ticker DGRO. DGRO was launched and is managed by BlackRock, and the ETF was launched in 2014. It focuses on companies that are not only increasing their dividend at a fast rate, but doing it on a consistent basis. The ETF currently has nearly $23 billion in assets under management, and it has a low expense ratio of 0.08%, another great low-cost option. Over the past 5 years, DGRO has underperformed the S&P 500 by about 8 percentage points. The ETF is well diversified across many different industries, and the top 5 industries include healthcare, financials, technology, consumer defensive, and industrials. These top 5 industries account for nearly 76% of the fund. Now let's take a look at top holdings, which include Microsoft, Apple, Johnson & Johnson, ExxonMobil, JP Morgan Chase, Chevron, AbbVie, Procter & Gamble, Pfizer, and Broadcom. And these top 10 holdings account for 27% of DGRO, and in totality, in terms of holdings, this is the largest ETF with 449 total holdings. Now for the dividend, in which DGRO has paid out a dividend of $1.20 over the past 12 months, which equates to a dividend yield of 2.4%. Over the past 5 years, investors have enjoyed an average annual dividend increase of 10.3%, and the dividend has increased for 8 consecutive years and counting. DGRO is an ETF that I hold within my portfolio, which you can see my entire portfolio by signing up to the Dividend Investor's Edge. I have a free version which covers the market update in the week prior and look ahead. That is delivered each and every Monday straight to your inbox. And then for less than $1 a day, premium subscribers get to not only see my monthly portfolio updates, but they also get 2 stock deep dives and my valuation dashboard, which is put out each and every month. You can find the link down in the description below. Dividend Growth ETF number 3 is the Wisdom Tree Quality Dividend Growth ETF, stock ticker DGRW. DGRW is not an ETF that I have covered on my YouTube channel before, but I recently did a write-up on Seeking Alpha, and I have to say, I liked what I saw. DGRO was launched by Wisdom Tree, but it is also co-managed by Mellon Investments, and they just recently crossed their 10-year anniversary. The ETF has nearly $9 billion in assets under management, and they have an expense ratio of 0.28%, making it having the highest expense ratio out of the 4 dividend growth ETFs that we're looking at today. In terms of performance, you can see that over the past 5 years, DGRO has outperformed the S&P 500, albeit slightly. But that is largely due to their technology exposure. Looking here, you can see that the ETF is very much exposed to the technology sector, which makes up 30% of the entire portfolio. The next 4 largest sector weightings include consumer defensive, industrials, healthcare, and financials. Those top 5 industries account for 86% of the entire fund. Now let's take a look at top holdings, which include Microsoft, Apple, Johnson & Johnson, Broadcom, Procter & Gamble, Merck & Company, Coca-Cola, The Home Depot, PepsiCo, and Cisco Systems. These top 10 holdings account for 36% of DGRO, and in totality, the ETF has 298 total holdings. Now for the dividend. DGRW has paid out a dividend of $1.32 over the past 12 months and currently yields a dividend of 2.1%. Over the past 5 years, investors have enjoyed an average annual dividend increase of 12.3%, and the dividend has increased for 2 consecutive years and counting. We can't do a dividend-focused ETF video without mentioning SCHD, and that brings us to our 4th and final dividend growth ETF, which is none other than the SCHWAB US Dividend ETF, SCHD. I recently put out a video on SCHD and the power of compounding dividends and how that can create life-changing money for many investors over a long period of time. Definitely check out that video. I'll put a link down in the description below and you can see it somewhere up top here. SCHD right now is by far the most popular dividend ETF on the market right now. It offers a solid performance, it offers a solid dividend yield, and strong dividend growth, checking off all 3 of those boxes. Over the past 5 years, SCHD has gone toe-to-toe with the S&P 500 by returning nearly 70% over that time frame. The ETF is well diversified across many different industries. The top 5 industries include industrials, healthcare, financials, consumer defensive, and technology. Those top 5 industries account for nearly 75% of the ETF. Now let's look at top holdings, which include Broadcom, which has made a big move of late, PepsiCo, Merck & Company, Coca-Cola, Cisco Systems, The Home Depot, Texas Instruments, Chevron Corp, Pfizer, and United Parcel Service. These top 10 holdings account for 42% of SCHD, and in totality, the ETF has 104 total positions. Now for the dividend. SCHD has paid out a dividend of $2.64 per share over the past 12 months and currently yields a dividend of 3.75%. Over the past 5 years, investors have enjoyed an average annual dividend increase of 15.6%, and the dividend has increased for 10 consecutive years and counting. So there we looked at 4 great dividend growth ETFs. We went from the slowest in terms of their 5-year dividend growth rate to the fastest, which is SCHD, with over 15% dividend growth rate over the past 5 years. Now, is that something that they can keep up? Most likely not, but that's just how we went through in order here for this video. Down in the comments section below, let me know which of these 4 do you prefer in your portfolio. And if you haven't done so yet, smash that like button down below as it really helps me with the algorithm and it helps grow this channel. And with that being said, we'll see you in the next video. Take care.